Hello, and welcome out to another Insights. I'm going to start off with this quote. This is one that I found last week, and I decided to override it with a different one that I thought was more appropriate. However, I think this may be even more appropriate this week, especially after the week that we have had. And the quote is: "The cowards quit, the fearful follow, the selfish run, the afraid pretend, the weak ignore, the brave fight, and the relentless win." It takes a relentless pursuit and a massive vision and a massive dreamer to succeed in the market. Because trading's tough. We all know that. It takes, I'm just going to say it like it is. It takes an extraordinary individual to stick with trading long enough to get to a point where you succeed. Um, I know many people, I've met many people all over the country that quit. And it took me a lot longer than I had hoped it would because I had some hurdles that I brought to the table that I had to overcome. So, um, and it's challenging. There's no doubt. We all have programming where we think a certain way because of the way we're raised, because of what we see, the experiences we have in life, and we bring those things to the market. And a lot of times they are detrimental, and we don't recognize them or we don't see them until it's either too late or we've done severe damage to ourselves. And so, unless you have a big vision and a courageous mind and heart and soul, it is difficult. It is hard to stick with trading, no doubt, because it's an emotional roller coaster ride. And there are people that will tell you that, how long you been at that? Hey, I did you give up by now? You got to quit? I mean, I've heard it. And then eventually you get to the destination. And you know what you hear then? Nothing. But you know what? It doesn't really matter, does it? Because here's the beauty. I learned this a long time ago, and it didn't take that long, but it's sunk in quite some time ago, that it doesn't matter to me what other people think. I mean, for example, my father does not understand trading. He doesn't believe in it, and he's an old school mutual fund kind of guy. That's what made him the money, and because back in the 80s, that's really all you could invest in. It was so expensive to trade or even invest in stocks. Mutual funds were it. And when you start investing in the late 70s and the early 80s, when the Dow was at 1,000, and 20 years later, 25 years later, it's at 11,000, it's kind of easy to defend your record, even though, in the last 15, 20 years, there's some other ways to go about it that would be better. And he's stuck in that mindset, and he's old now, and I'm not trying to be offensive as I say it to him to his face, so I'm not saying anything that I haven't said to his face. He's old. And he's stuck in his ways, and he's not going to change. He doesn't want to change. He doesn't want to see it any different because he's comfortable. And that's okay. And we don't even talk about it anymore. Except that sometimes it comes up, and it came up probably, I don't know, it's been a while, but probably 3-4 years ago maybe. How long you been at this? I mean, how are you doing? I'm doing fine. Well, do you think there's ever going to come a point where it's just not, I mean, how long are you going to do it? Implying, insinuating, how long you do it till you quit? And it's funny that once you get to a destination, all of a sudden, boop, nothing more said. No more questions are asked. And a lot of, realistically, I mean, not to get too personal, but I don't even talk anymore about anything. So they can either see it or they can't. And I don't say anything. I just let things be. And they see what they want to see anyway. So what difference does it make? But what I learned a long time ago is that the beauty is, and I use my father for a very specific example because a lot of times it's our family that is sometimes the most negative or most cynical. And it's not necessarily that they're trying to be. It's just that I think a lot of times it's that they care and they're trying to do the right thing and they think that they're doing the right thing, even though in reality they're doing the opposite of what they should do. But the beauty is, I learned a long time ago that when I wake up in the morning and I look in the mirror, I don't see my father. I mean, sure, I'm like my father in a lot of ways. Some people have said I look like him to a certain degree, um, but it's not him. It's me. I don't have to answer to him. I answer to me. When I get up in the morning, I look in the mirror. I have to be happy with what I see. I have to be proud of who I am and what I do. And I don't care if he likes it or not. Some of you might be in similar situations. I don't know. I mean, I can't tell you. And part of the reason I bring that up and I use myself as an example is I've met tons and tons of people across the country that share a similar story. They have family members or friends, even spouses, that are unsupportive. They're negative. They are cynical. They ridicule. They make negative comments that really you don't need to hear. And so part of the reason I tell you this is because if you run into that negativity, just get away from it. You don't have to. I mean, I guess it depends. I mean, family. I mean, do I have to hang out with my father? No, I do. I love him. He's a good man. He was a good father. And he thinks he's protecting me or whatever. I'm not sure what he thinks, and I really don't care. But if you're in that type of situation, then it's okay. It just is what it is. It's much like, I mean, quite frankly, a lot of the things that you learn from trading. Acceptance is one of them. If you haven't had advanced trading mindset, getting into the acceptance lesson, look, people are going to think what they're going to think. Market's going to do what it's going to do. You don't have any control over it. Just accept it. My father is who he is. He thinks the way he thinks. I've accepted it. Just like I accept trades the way they go. It is what it is, and just let it be. And there's no trying to change it or modify it or mask it or anything like that. It just is what it is. So my father's a good man. I love him. He is who he is. He doesn't do everything perfectly. There's things he does that I don't like, but so be it. Still a good man. Anyway, enough said. I think we covered that. Anyway, so if you're dealing with challenges, if you've got stuff like that in your life, just have fun with it. Life's too short. I just laugh at things now. It's too short to get all serious and get all wound up tight about things. So look at it. Economic data coming up this week, though. Don't think anything huge. Core CPI, housing starts. That may affect the housing sector, obviously. Real earnings. We may be at a point, and this is, I think, worth mentioning. Existing home sales. That's what, Friday? It's Friday the 22nd. Yeah. We may be at a point with the market that some of these things start becoming a bigger deal. When the market gets on edge, they're looking for any excuse they can to cling on to good news and push it higher. And so, and this is just my opinion, I'm speculating that a lot of people that, when things are good, like they have been for the most part for the last 5, 6, 7 years, then they don't pay much attention to this stuff. And then all of a sudden, when things start to hit the fan, like they have been the last couple of weeks, and they start to drop and things get hairy, then they start paying closer attention to it. And it's not necessarily that they care anymore or that the numbers really matter. It's that they're looking for something to cling to. They're looking for something to justify being bullish. They're looking for something to justify it going up. And so then what happens, I think, and again, this is speculation, is that we look for reasons. People are looking for reasons for good news. They start digging and hunting and looking for anything they can to say, oh, look, it's going to go up because of this. Oh, look, the Philly Fed came out and it's looking bullish, so now we can buy. When the reality is, when times are good, they really don't care. But now all of a sudden we got to look for a reason to justify. It's part of human nature. It's what we all do, right? We look for news that we want to find to justify what we already believe. Instead of looking at news and handling it objectively, not coming up with a belief or a decision until we have as much data or information as we can until we feel comfortable making a decision. We make a decision and look to justify it. People want to be bullish. They prefer to be bullish. They want to believe this market's going to go up. They don't want to believe it's going to go down. They don't want to believe the economy's getting bad. They don't want to believe any of that stuff. And so they look for anything they can to justify a bullish mindset because they want to be able to say, I'm an optimist. I think everything's fine. So this may start getting scrutinized more and more, but there's nothing really that big coming out data-wise. So let's move now and look briefly at the charts. And the last couple weeks has done what I've kind of suspected would happen. Considering we're getting lower lows and lower highs, and we look at the longer term, and here we go. And we look at a weekly chart. Not a spectacular head and shoulders, but a little bit of one there that has broken. We've got that drop. We've got the initial, we've got one big swing there in August and then another big swing down right now. Even if we bounce here, it's not really that pretty. I'm going to move this one down and watch this. This is the part that is going to freak a lot of people out. Well, maybe not, but let's see if we can try to get a 1555. Let's put that right at 1550 and see what happens. Get a good round number. I don't think it's going to change it much. No, it doesn't. But you know what? That's probably the number. Yeah, that is, I think, a good number, 1550. Reality is, when we look at this, there is 1867. If it breaks there, there's not much to hold it. Neither one of these are, neither one of these are that strong. They only have really 2 points. So there's not much to hold this market up from there. What I would expect, what I think is probably going to happen is this uptrend that we have here, we'll probably have that maybe even faster, accelerated. We might even get a crash with a few little bounces here and there. That's the way it looks. It really looks like this market wants to head lower. I think we are in the very beginning of possibly a long-term downtrend or a very quick crash. I think the faster and harder it crashes, probably the faster and easier it's going to bounce, kind of. That's the thing that's so hard to say, because I think we are in a very different time than we've ever had. We've got that trifecta. You got the baby boomers that have a lot of their wealth, if they can call it wealth, tied up in the market. And when it gets worse and worse, they're going to start to panic. They're at that point where they can't risk it. And for the last year or two, people say, oh, the market's been up, it's been performing spectacular. And that's when everybody starts to jump in. The common folk, I hate to say that, but it is what it is. The average Joe that doesn't know anything about the market goes, oh, well, the last 5 or 6 years it's been up. And what do? They get in after it's already rallied. They get in at the end. That's the way it works. And so you've got all these baby boomers that in the last year or two, I'm sure they've piled a bunch of their money in the market. And then when it starts to drop, dang it, I thought that was gone. Sorry. I thought I was going to make it all the way through. I can guarantee you that in the last few months, the baby boomers have panicked. Back in August, when it dropped like that, they freaked out. I guarantee you. Because they're going, uh-oh. And if they're just recently putting their money in, that means they're underwater now. If you just go take $200,000, $300,000, here's my retirement. If I can make 10% a year in the market, whoa. And all of a sudden, their $200,000 now is $175,000. They're freaking out. And it happened in a week. And then honestly, this just hit my brain, and maybe it's a conspiracy theory, maybe it's not. But see, what happened after that is it bounced. Nice little double bottom, and then it rallied back up. And see, all the financial advisors, I'm sure we're getting phone calls, people panicking and freaking out, and go, what do I do? What do I do? Just hold on, it'll come back. You know what happened? It came back. It made all of them right. Then you know what they're going to tell them now? Now it's crashed in the last 3 weeks or so. It's dropped off. They're calling their friend and going, oh my gosh, it's dropping again. It's dropping. What do I do? Don't worry, it'll come back. Remember last time? Remember back in August and then October, it bounced back up? It'll come back. Then you know what will happen? It'll drop down here to 1800, then it'll drop to 1737, then it'll drop to, and every single time they do it, they're going to call and go, oh, what do I do? What do I do? Don't worry, it'll come back. Don't worry, it'll come back. And all the people back in here say, don't worry, it'll come back. Don't worry, it'll come back. Don't worry, it'll come back. Don't worry. Oh my gosh, it's never going to come back. I'm going to get out. And then they get out down here. And then they stay out of the market until it gets up here. And then they get back in, and then it starts to crash again. They go, oh my gosh, what do I do? I don't know what to do. And they take everybody else's advice instead of learning themselves. Now I'm getting off the rails a little bit. But I think we have a Fed that's over leveraged. I think we have an economy that is extremely weak. Real wages have gone down. People are making less and less. Their expenses are going up. You got too much government regulation, too many government mandates that are costing companies and businesses and people tons of money. This Obamacare is a freaking nightmare. Excuse my French, but it's a nightmare. A big portion of people's dollars are going to healthcare now. They're being forced to spend money on healthcare, even though they may or may not need it. I'm one that is relatively healthy. I really don't need health insurance. I mean, why am I going to pay $150 a month? Why not just, that there's a mandate that says I have to. I might as well pay the fine. I'm going to pay cash for my stuff. But anyway, it's just, it's ridiculous. The whole thing's ridiculous. And there's, with my kids and being divorced and the way we claim stuff, and because Obamacare is tied into the tax system, it is an absolute nightmare. I had one guy tell me, and actually I talked to an attorney that said that might be right, but because I have 2 kids and being divorced, I get to claim one of my children. I get to claim my son on my taxes. And my ex-wife claims my daughter. So we each claim one child. He says, well, because Obamacare is tied into the tax system, you could only put a child on your health insurance if you can claim them on your taxes. I said, okay, so what about my daughter? Well, you have to get a separate policy for her. Double deductibles, double premiums, double everything. And I talked to an attorney that says, yeah, that sounds right. But he said, I don't think a court mandated. Obviously I'm mandated to have insurance for him, or pay for it at least. My ex-wife works for a big company, so I get it through there. I just have to pay for it through her. So anyway, it's a nightmare. It's an absolute nightmare. And people are spending more and more money on that. Food costs have gone through the roof. So people are spending more and more of their dollars just to stay alive. And they don't have as much for play stuff. And if things get worse and unemployment goes up, people start losing their jobs, which I've heard several people saying they're losing their jobs. I've talked to a couple of drywallers that are slowing down. And so there's some serious concerns. So you've got the Fed over leveraged, an enormous amount of debt. You got the baby boom generation heavily invested in the market. It is the perfect storm. And I know I've talked about this, and it looks like we're in the very beginnings of what could be a very swift, very fast, very hardcore crash. And I know I keep saying that, I beat that drum, but it's really just, be prepared. I know people say, well, you're a pessimist. You know what? I'm going to hope for the best, but prepare for the worst. And that's really where I'm at. I'm going to be prepared for this thing to crash and crash fast. And I want to take advantage of it and make a bunch of money as it drops, because I didn't take as much advantage of 07, 08 as I could have. I should have, but looking back, I see it now. So, but we're sitting, the S&P, man, it dropped off quick, and then it bounced on Thursday. It looked like it was going to make a nice bounce, except that it really didn't get down to support. Well, it did Friday. And it bounced, just not a ton, but this is reminiscent of this back here. Whoops, wrong way. You look back here, we got to 2000, right? The candle looks almost exactly the same. The only difference is, well, it did. It gapped down from the day before. The only difference is we had an update the day before. It looks exactly the same as that 2000 one, right? And then we had a nice little stall out day, and then we broke again. And I wouldn't be surprised to see that happen again. But what we may have, you noticed a huge increase in volume. What we may have is a capitulation. It's not there yet, I don't think. I really don't. It could be a mini capitulation. In other words, capitulation meaning that everybody throws their hands up and says, all right, forget it. This right here is capitulation. That very last drop, let me zoom way in here. This right here where it's at 850 and it drops to 680 very quickly, that's everybody that all the average Joe is going, oh, forget it. It's never going to come back. I'm getting out of here. And they sell off and they run and they sell at the bottom. and that's typically how things go. Yeah, I think it'll be interesting. This next week is going to be very telling. But I am actually expecting a bounce on Monday, Tuesday. Um, and if it doesn't give a pretty solid bounce, I mean, you see what happened here. It sold off in 5 days and it bounced pretty solid. And that stopped it for a while. It actually created a little bit of a rally. But I think we're going to bounce here Monday, Tuesday. If it's a big bounce, then I'd be a little more neutral. If it just does what we did here, a little doji or a couple little spinning tops, then I think we're definitely getting ready to crack again. And I will, if it looks right, I will start to gear up for a big drop to the downside. So we'll see. We'll see what it brings. NASDAQ, ooh. Yeah, we're basically about the same. Look at that head and shoulders there. That's beautiful. What does a weekly look like? Yeah. Yep, it is. It is looking. Yeah, I mean, it is. It is on one hand kind of nerve wracking to think that the economy could tank like it did before, but at the same time, it is what it is. So, transport's just getting beat up even more. This is transports have dropped significantly. You look at that. Even there's the trend right there has been busted from '09. There's nothing. There's really almost nothing to stop this thing from falling to 5,500. Yeah, I haven't even looked through the rest of the markets. The Russell, same thing. Big head and shoulders, nothing to stop it until, I mean, there's a little bit here and there, but there's not much till 868. So gear up. Gear up and there's the VIX. And notice the VIX is not, a lot of times we get these really quick spikes and then they settle down. This is more of a nice steady climb. And there's the, and I'm just trying to look and compare it to other periods. And very similar, interesting to 07. Look at it where it bounced, it rallied up, then it dropped back, and it kind of bounced between that 17 and 30 area for quite some time in 07, 08. And so we very well could have a very similar type of situation, except that it's, there it kind of went back and forth a bunch. Here it bounced, it rallied up, and then it dropped off. Then it's just kind of danced around for the last several weeks. Last month and a half, 2 months, there's that thick bunching of stuff, of data. And it's rallied here, so hard to say, but I think we're getting ready for a ride, so be prepared. With that being said, I am going to get into my optimistic mode and think about how much cash is going to land in my doorstep if this thing crashes. I just need to get loaded back up on the put side. Because I cleared out of everything, thought I was going to bounce, thought things were going, so, but that's okay, because it's not that big of a deal. But I will say this, the fact that if this thing breaks that 1867 area, there's 300 plus points that it could drop without much to stop it. So be ready, be prepared. It could be, I kind of hate to say this, because I don't like to speculate and get too excited about things, because there's been times where I've gotten excited about things and then they didn't play out the way I got excited about them. But I mean, this could be one of the biggest crashes we've seen in a long time. If it breaks that 1867, then yeah, 330 points is huge. I mean, that's 18, 19%. And it very well could do it in couple of weeks, a month or two, in a very quick fashion. So, I mean, let's see how far has it dropped here. 2078, 28. It's dropped 200 points in 2 weeks. Another 300 points. I mean, that's 100 points a week. It could do it 3 weeks. So, gear up, be prepared. If it bounces, then okay. We adjust, we adapt. But if it doesn't and it crashes, let's be there. So let's be ready for this puppy. So y'all have a great day, great night, great weekend, and we'll see you on Monday with some trading. All right, bye bye.